Hey, what's up, guys? I'm back with another one. Okay. So basically, today I'm just giving you a play by play of exactly what I'm doing in the stock market this week, just so you guys can be updated with what's going on with what I'm doing and just how I'm doing it pretty much. So, as you can see, we're on my Robinhood. And, with Robinhood, they actually did update their user interface. And I really like it. I like their font that they have for their text. It definitely looks more professional, and it's definitely a good change and a good move for them. The color of the green is definitely something I need to get used to because it's more like a lime green as opposed to what it was before. So I got to get used to it. But other than that, it looks really nice to me, and it's definitely a lot more professional than what they had before. Okay. So basically, I'm going to tell you my plays for this week. And yeah, so with my Robinhood, as we all know, I do my options trading. I don't really day trade, but I might do that occasionally. I haven't done it in a while, but I do basically options trade on there. Mostly, I do have a Fidelity, and that's for my long term portfolio. And everybody should have a long term portfolio, especially in a Fidelity brokerage or something like that. So a place that's that you can call up the people there. You can talk to somebody physically. Not physically, but over the phone. Not have to email whenever there's a problem going on. I'm gonna get into exactly what I'm doing this week. Okay, so basically, what I'm doing this week is I basically sold my call option for Nike. Okay, so I'm gonna keep this brief. I sold my call option for Nike, but it's not a bad thing. So basically, I was able to double up what I invested. So I bought four contracts for $5 each, making it $20 that I initially put in, and I doubled it up. I gained $20 from the options from the premium because Nike was going up pretty well today. It hit $97. And with that, I was like, you know what? I don't see Nike getting to 110 by the next two and a half weeks. I don't see it. So I decided to sell it. And I think that was a smart move on me. Sold it, doubled up my investment. With that $40, basically, I took $30 out of it and I did a what is it called? I did a credit spread, a put credit spread. Okay, so a put credit spreads, they help you leverage your account, so you don't need to have $1,000, thousands of thousands of dollars in your account like you do need to when you're selling puts. Even though I prefer selling puts because they're a lot safer and because you can make more consistent income with selling puts, because when you sell a put and it does become exercise, you basically are forced to buy the share. And it's not like they don't take your money, you're just forced to buy the share. And with that, you can do a lot with the 100 shares of things. You can sell it, you lose a little, like $100. If you sell it, then you can lose a little bit of money, whatever. But at least they're not taking away all your money like they do with a credit spread. Okay, so but I did a credit spread anyway, and I did it the way that I feel like will be a higher risk reward ratio in my eyes. But other people have their own ways of doing things. So for SPY, which is let me show you what SPY is. I did a credit spread, a put credit spread for SPY, which is the SPDR S&P 500 ETF. So exchange traded fund, which tracks the S&P 500. Basically, try to copy it and stuff like that. And people who buy it gets the whatever their holdings are, the top I don't know 500 stocks in the S&P 500, basically something like that. Okay, so they get that. They basically, it tracks the market, and it's safer for people who do not want to take the time out of their day to research stocks and research companies, and try to do it on their own when they can just invest into 500 very strong companies and that follow basically the market. And that's pretty much it. So I did a credit spread for them. Basically, so you go to you hit view, whatever. I did a trade options, and then I went to May 29th. So May 29th, these are basically the expiration dates. Okay, so May 29th is this Friday. And what I did was hit select right here. I purchased, so it says sell put, right? So make sure it says sell put. I purchased the this top portion right here, and then I did buy put right? And you got to make sure your buy put is underneath, okay? So with that, you see the $2.73 and $2.49. When you subtract those two, is the minimum credit that you're supposed to receive, give or take, because it's a bid and the ask price, and that can kind of change things. So when I hit continue at the bottom, that red place, you can see your total credit you're receiving is 24 cents, which is the subtraction of those two, like I said, and it's times 100, so it's really $24, right? So I did that basically, but I did mine's with two different ones. These are two different ones, but I did the exact same thing. The minimum credit I received was $20. Okay, so with that, then you do review and okay, whatever, and you see that I need collateral. Okay, so it says 1406, but it's more than that because I have like $12 in already in my purchasing power. So it's really $27 that I need, I believe. So but which isn't too bad because you're getting a credit of $24. If everything goes well, you're gonna get that $24 if it's above, because when you do a put credit spread, you're basically saying that you have a bullish opinion and the stock is going to go up above what you bought that credit spread at. Okay, so with this I did 299.5, so I'm saying it's going to be above it by the end of May 29th, by the end of the trading day, May 29th. Okay, so with that, I'm risking $27 to make 24. Okay, which is not that bad compared to what calls and all that, and doing call options, buying call options and buying puts, when you see that they're what you're risking to is not, it's not enough. Okay, so that's what I did, pretty much reviewed it, and and it's you're taking on risk for sure, but it helps you to have leverage, because it's when you're trying to buy things like this outright, when you're selling a put, you need like $29,000 just to do that as collateral for the SPY. Okay, so as you can see, you see your chance of profit, which is 63.98%, and that's the chance of profit that you have to basically get the $30 that you put in, right? Or whatever that you put in, the $30 that you put in. For me, the $30 I put in plus the minimum credit, because they do give you a minimum credit. Okay, so if it stays above of 299.5, I get whatever I put in plus the minimum credit. So I get back my 30 and then the 20, and then I basically have 50. Okay, and that is by the 29th. And I do have a 63% chance of winning. But here's the catch for me, right? So I don't 100% know. I would do my research, but I don't 100% know whether or not if I lose, do I still receive that minimum credit? So let's say that the 299.5 that I bought it at, it goes below. It hits 298, right? And I know obviously by the time it's the closing day, or the closing trading day, whatever, the May 29th, by the time that hits, I lose my collateral, right? So the $30 I put in is gone, So whatever, if it goes below what you think it is, the $30 that you put in is gone. But what I want to know is, do I keep the $20 credit that I have? Because it's not necessarily in my buying power yet. As you can see, I only have 11. So that's from me. So if I lose, do I still get the minimum credit? And if I do get the minimum credit, then if you do the math, 30 minus 20, I only risk $10 to make $20. So that's so I'm waiting until Friday. If I lose, okay, it'll clear up a lot of things going down the line for me, because this is my first time doing it. And if I win, then I don't know, because if I win, I do get my 30 and I do get the minimum credit. So either way, we'll see what happens. I'll definitely keep you guys up to date. This is just what I'm doing in the market this week to see how things work. Some people say you do keep the minimum credit whether or not you win or lose, okay? So that literally makes what I'm risking pretty much nothing. That's a Chick-fil-A sandwich meal. That's nothing. So let you guys know how that goes. And I do want to tell you, the lower you go, the higher your chance of profit is, because you're saying that it has to basically drop from $299.73 to 209. Let's look at this one right here. 290 put. It has to drop like $9, almost $9.73 by in 4 days, 3 days. So by May 29th, okay, for you to lose pretty much. So that is very almost very unlikely, but it can happen. But because you have a higher chance of profit, what you're gonna make from the difference of the two, the 47 that you see at the side and the 38 is smaller. So we will see what happens. If I lose, I'm okay. If I win, cool. I really want to see what happens if I lose, to be honest. But that is everything, and hope you guys have a wonderful day. Okay. So if you have any questions, just leave it in the comments or anything. You guys can like, comment, and subscribe. I'm giving you guys some very interesting gems, some things that can actually make you consistent income if you time it right, do the right things, and you'll be okay. Okay. You can make a good amount of money doing this. I'm telling you for sure. Okay. So you guys like, comment, and subscribe. Thank you.